From Walmart to Ralph Lauren, our next guest is weighing in on this holiday shopping season's winners and what's ahead for 2025. Joining us right now is Jan Kniffen. He's the CEO of J. Rogers Kniffen Worldwide. And Jan, it's great to have you here on this very important day for the retailers. How was your Thanksgiving?
Hey, it was great, and I'm not wearing jeans, so, Dom and I are not going to be in the same boat here.
You are wearing pants.
Yes, I'm wearing the full gear. And
okay.
I will be out in the stores right after I get off of this hit. But
all right,
I was out all Wednesday. And
go ahead, sir. The shoppers are out?
Clearly they are. They've been out all week. We had a strong week leading up right through Wednesday, and it's been the best period since November started. And I think that's going to continue today, and I think it'll run right through the weekend and Cyber Monday. This is going to be a strong finish here. Remember, we're already 6 days closer to Christmas than we were last year on Black Friday. So everybody's going to be out, and they were already on Wednesday.
Jan, you and I have had kind of a running conversation off air since the election. We just showed how many of the major averages, the stock market averages, have had their best month in a year, some even longer. We've been talking about crypto up 40% for Bitcoin since the election of President Trump. And I've been trying to figure out if that enthusiasm that you see from investors has also played out in terms of consumer confidence, and that means stronger sales. What's your take on this?
Well, every 4 years during the presidential election period, we get a little lull before the presidential election in retail sales, and after we get the post-election bounce. And I didn't know if that would happen this year because the lull wasn't very deep. But yes, we got the post-election bounce, and it has continued, and now it's strengthening as we head into the holiday. So I do think that's half of the people are glad, and the other half are relieved the election's over. And it happens every 4 years, and it happened again this year. And I think it's going to continue right through holiday now because we don't have any inflation in goods, and goods are what people buy for holiday. We're still seeing inflation in services, and the consumer looks at it, and they're smart enough to go, the sweater that Dom's wearing is a better deal this year than experiences. And they're buying stuff. And that's a technical retail term, of course, stuff. And we're seeing that continue. And I believe we're going to see a gradual shift here toward discretionary retail goods, and that's going to propel right through into 2025. So I'm feeling pretty good about discretionary retail right now and in the beginning of next year.
Jan, I thought you were emailing only with me. It turns out you were also emailing with Becky as well at the same time. But be that as it may, I have been publicly right over the last several years because of help from you in thinking broadly about the consumer. Because not only do you look at a single product on the shelves and the price, you also have this fantastic macro view of the consumer. And where you have guided me over the last several years is in not believing that the consumer was about to give it up, which is what everybody was saying in the post-pandemic period. So give us your view now, Jan, publicly here, not in a private email, about where the consumer is, where their balance, how their balance sheets are, their savings. You looked right through this notion that the consumer was out of savings in the post-pandemic period, and we kept believing that there was not going to be a recession. I want to thank you for that publicly, but also get your take on where things are going.
Steve, I have the benefit of not being an economist. I'm just an old retailer. And I have been watching the retail consumer for 50 years.
Right.
And the retail consumer is not that hard to figure out. If the consumer has a job, they think they'll keep their job, and they believe if they lost their job, they could get one paying just as much or more. They keep spending unless something stops them. Debt can stop them, but the consumer's ability to pay back is fine. We haven't seen any change really there. They're as good as they were pre-pandemic. They are loaded up some on debt, but not enough to stop them. And that won't keep them from buying unless they're fearful that they can't pay it back. And that's when they get job concerns. We're not seeing any of that, and we haven't seen that for the consumer, even right through, well, right at the beginning, of course, of the pandemic we did, but not after that. So the consumer's in really good shape. Unemployment's still low, if not a little higher than it was, but it's still low. Continuing claims aren't that high. They did cross through 1.9 million, but they've been hanging in the 1.8, 1.9 million range. So the consumer's not that fearful. So they don't look quite as strong on the data as they did on things like unemployment and continuing claims, but they look fine. And pretty much everybody that wants to work is working when you're looking at a 4% unemployment rate. So I feel really good about my consumer. I do feel pretty bad about the lower end consumer. They're still really struggling with the impact that inflation caused over the last 3 years. But if you're looking at the $100,000 annual household income or the $200,000, and that's a huge chunk of what we get for Christmas spending, they're doing very, very well. The $200,000 a year consumers told us they're going to spend 20% more than last year for holiday.
Wow.
That helps a lot when you're getting your numbers.